right, good morning, everybody. Well, first of all, welcome. It's not, for some of you guys in the West Coast, it's probably pretty early, but for the rest of us, it's 10 o'clock, it's go time. So guys, I want to talk to you guys about a specific trading strategy that I've been using for over a decade in trading the market open. So there's a million different types of trading. The gentleman that just did the candlestick stuff was fantastic. I actually learned a couple things that I had never even thought about. And there's so many different types of trading. My primarily specialty is trading the stock market open, which is really that kind of first hour of the market, first 2 hours of the market, where you really get a lot of the heat in the stock market. So, you know, when the market is open from 9:30 to 4 p.m., you're going to have ebbs and flows of when the market is fast and when the market is slow. But I would say the majority of action, 80% of the stock market's range actually takes place in that first hour. And so I want to talk to you guys about a couple strategies that you guys can use to really capture that volatility that you have at the open. And then you can go and really do whatever else that you want for the rest of the day. So what we'll do today, let's just go over the agenda real quick. And then, man, we're going to get right to work, and I'll make sure to answer everybody's questions at the end. We'll talk a little bit about just what I do, an overview of my style of trading, why I think this is probably the best style of trading for people that are trading retail accounts. What I mean by retail accounts is, you know, people that are trading less than millions of dollars, right? The average person that's trading out of their office or from work, or you know, like for me, I'm trading at my house all day. We'll talk about how we find the stocks to trade at the open, meaning that, you know, when you have a trade, there are different parts to a trade, right? So you have to first find what you want to trade, right? How do you pick the best stock of the day or the handful of best stocks of the day? Then how do we actually go out and enter these names, manage the risk, size our positions, and then, of course, know where to sell. And that encapsulates really a good chunk of what is inside a trade. We'll talk about my favorite opening trading setup, which is an ORB pattern, which is a simple pattern that is really based on hitting a stock at the open within the first 30 minutes. We'll go into some habits for consistency. Probably a lot of you guys have already seen it, you know, in the markets, like even when you know what to do and you've taken classes, you've read books, that consistency is really what eludes so many of us. You know, it's like, okay, I make money one day, then I lose money the next day. Hey, I make money for a week and then I lose it. I tend to lose more than I make, so on and so forth. That realm of like what happens is across the board for all traders. I would say, you know, the thousands and thousands of students I've taught over the years, I've never had a relationship with anybody that didn't have that consistency issue in the beginning. It's a natural thing, but there are very simple tools and tactics that we can use to get into that consistent flow state where you're able to go and do your process every single day. And then, of course, you know, we'll talk a little bit about how to advance yourself as a trader. I do primarily, I would say 70% of what I do is day trading. I also do swing trading and some longer stuff, but my specialty is really day trading in the stock market. When I do more swing trades and longer term trades, I do that typically in the cryptocurrency market, which is, you know, probably my favorite market to trade right now. If any of you guys are, you know, if any of you guys are trading cryptos, you probably have seen like all sorts of runs in the market, and it's been a wild one. So my swing trading goes into that, and then day trading I'm doing in the stock market. Hey, Rajesh, what's going on? So for who am I? I'm the head janitor at this place. I own Bulls on Wall Street and Bulls on Crypto Street. I started Bulls on Wall Street in 2008 when I was in my 20s and I became a full-time trader. I've been trading stocks full-time since then. I started trading full-time at the age of 27. I've made tens and tens of thousands of trades, tracked them all, and taught students how to trade this strategy that I use. I've been speakers at events all over the world. As you probably can tell, I'm Indian, so international has always been a big part of what I do. I spoke London, Japan, anywhere you can think of. I have been giving events where I talk about this specific thing that you guys are going to learn today. I use a momentum-based trading strategy, which is essentially I want to be in the best stocks every single day, every single week. What I'm talking about the best stocks is the stocks that can move the most in 1 day, 2 days, 3 days. You know, you'll see a lot of people, you know, come on and they might trade the Googles and the Apples and so on and so forth. And that's totally fine. Like those things are also a part of any strategy. But when you're really day trading, like you want to be able to find stocks that have big range. I'm not talking about like penny stocks or anything like that, but there are 40, 50, 60, 80, $100 stocks that can still move 20, 30% in a day. And when you're a new trader and you're building up a smaller account, right, something less than $1 million, then you've got to go in and be in the best stocks possible. If you got $10,000 or $20,000, like trading Apple, it moves 1% a day back and forth, you're really not going to make any money in it. And so then what happens is you can't make money in those kind of stocks when you have a smaller account. So then people get fed like, okay, well then you have to do the options on this and add leverage to it. And most of that is a misnomer. You know, I have all my friends are traders. I've met like 3 good options traders in my life. It's a tricky business that often can have booms or busts in your trading. I think this is a good way to build. And then once you have it, you're able to really get these things going. So let's talk about my method of day trading. I use a momentum-based approach. I'm a technical trader, meaning I use charts. Often I'm looking for trending stocks and sectors that have some type of catalyst. So every year, there's a theme in the markets. So in the past year, like IPOs was a big theme, right? You had IPOs like Airbnb and Affirm. There were so many of them, and that was the hot thing. And then towards the end of the year, what was the theme in the market? Electric vehicle companies. So you saw companies that, you know, were playing off of Tesla that would go on like huge runs that like nobody had even heard of, right? Like, you know, like FUV and RMO, and you had there was an electric vehicle craze towards the end of the year, and any company that just put the word electric in their names all went flying from $5, $6, 30, 40, 50, $70. And then now they're all back to where they started, which is how, you know, themes work. But I want to always be hunting for some kind of catalyst, some kind of theme that's working in the market. SPACs, crypto stocks. Like right now, cryptocurrency is a theme, right? You've probably heard of like things like Dogecoin running around. So my trading will be focused on where the heat is in the particular market. And the reason you want to be doing that is that that's where the real range is going to be and the returns are going to be. You know, if you look at any given stock over the years, whether like especially in large cap names, you know, they move for like 1 or 2 months and then they really sit around for the rest of the year. So we want to be a part of stocks when they have those kind of 1 or 2 month runs, and then we find the next theme in the market. I tend to trade mid and large cap companies, but the ones that move the most. I very rarely do small cap stocks, and I'll tell you why. You can really hit big on those, but the boom and bust factor it's incredible. Like for every student or every trader that goes in and just crushes it on the small caps, you know, you get 1,000 that just ends up getting stuck with some $1 stock in, right? And it's like, oh man, like there goes all my money. The boom and bust factor on those is really, really huge. The failure rate, the lower in price you go, the higher the failure rate often is. And the reason is that most of those companies are turds. They're not even going to be around in a year or, 2 years. And that even happens with regular companies. Like you see this in the EV market right now. There are a lot of companies that had, right, this supposed game-changing technology, and then they've collapsed 90%. And so I'm into trading trends, and then when those trends end, I tend to do it in regular stocks that have some kind of catalyst. I want to be trading stocks with expanding or high relative volume. What I mean by that is that volume is obviously, an indicator, but it also represents the emotional intensity, the fuel that is going to be in the market. And so what I mean by that is that, if you have a stock that's running around trading 2-3 million shares a day, and all of a sudden that sector starts to pick up some steam, and the volume starts going to 10 million, 15 million, 20 million, so on and so forth, that's a big sign that the buyers are coming in and that this move is ready to stay. I find that the best style of the trading the open happens within the first couple days of a price move, and then you can keep doing it after that. The best time to trade this type of strategy, and it works all year round, is really during earnings season. Earnings season comes 4 times a year. And what earnings season is, for those of you guys that are not familiar, is a company has to go out and report their earnings. Hey, I made this much money, I did this much revenue. We have these new things that are going on. Earnings season is an awesome time because it's got surprises. You can have 1,000 analysts covering a particular stock, but the earnings are always a surprise. Like whatever happens, like everybody usually gets it wrong. And so a stock will start in the pre-market making a gap. And what I mean by that is like it could be at 10 bucks and then it opens at 15, up or down, and it depends. And so what we want to be doing is hunting for those gaps in the morning because they'll tell us what stocks have the best news. Let's talk a little bit about setting expectations, trading myths versus realities, and then I'm going to dig right into these patterns. I'm going to show you a little bit about what I do. Big part of trading that everybody thinks is like, hey, every single person says like, hey, I have a very simple strategy. You can follow it. Oh, you can follow my alerts, these kind of things. Like you'll make money, just follow me. This is a job. It is no different than learning anything, whether you're a doctor, lawyer, accountant, teacher, so on and so forth. This is a job. And that process holds no matter what. You want to learn something and it's going to be your job, then there's that process. If you really think about like what a doctor goes through before they ever really make their first dollar, you think about the time, the investment, right, the stress. Now we're not doing anything like that, but there's that process, and hopefully a much shorter process. A lot of people think you can just watch some YouTube videos, come into some webinars, books, DVDs, and you can, but the process takes longer because you have to take all this disparate pieces of information and put them together and try to figure out where it all goes. And that really can be tough. For example, you can go to my YouTube channel, probably get every single piece of information I have in my brain. But oftentimes, like, where does it go? How does it react? Hey, who are you going to talk with? Who are you going to work with? Who's going to look at your things, your trades? That mentorship aspect is very, very important, especially the one-on-one mentorship where you can actually call somebody, say, hey, this is what's going on. That's really where trading, if you want to be good, sometimes has to go. Like I learned how to trade from a guy named Paul Singh. He was my mentor. He actually works for me now. And he does our long-term trading classes and investing classes for swing traders. A big myth is that you need a lot of special indicators. A lot of people write scripts for like these magic indicators. They sell them. People make indicators and sell them. That's like a business. You don't need any of that type of stuff. The traditional stuff for markets in terms of even indicators, and you really only need a couple, they still work. There is no magic indicator that'll tell you when to buy a trade and when not to. Indicators are used for confirmation purposes only, meaning you have an idea, you have a price pattern, you have a trend. And what indicators can do is add a very small bit of confirmation to what your eyes are seeing. meaning that all indicators are confirming indicators. You have an idea, you have a price pattern, you already have something you're going to take. Now that indicator can take a 50-50 probability and add a few percent to it. You have a trend, you add a few percent to it. You have a price pattern, you add a few percent. And that's how you take something that's a coin flip, right? A trade is really just a coin flip. You buy, you sell, you win, you lose, right? Stocks go up, they go down. Everything is a 50-50 shot. But what happens is when you start to overlay kind of pieces of evidence from your price pattern to trading in the right markets, to being in the right stocks, to having a couple indicators help confirm what you're seeing, well, now you're taking something that's a 50-50 shot and you're starting to slowly increase those probabilities so that you can actually have a good statistical probability that that trade is going to work. You can follow someone else's trades and be a successful trader. I think that's probably, look, I trade live in front of my students all day. I'm on screen share and I'm wheeling and dealing and singing and dancing, telling them what I'm buying and selling all day. But to just follow somebody blindly like that, I don't think it works. Why? Because I have conviction in what I'm doing, so I may hold through XYZ, or I may be able to do this according to my plan. But if somebody else has a different account size, a different risk tolerance, if some people just don't have the stones to hold something, well, right, they're going to react in a different way. So that's why it's very important whenever you're learning something. Like for me, you know, when I'm trading live in front of my students, it's great for education purposes. Like you'll learn, you're like, okay, this is how he's seeing things in real time. But it's very hard to just follow people blindly. I've tried it before when I was learning, always lost. You know, some guys making money and you're like, I was trying to follow and I lost. Damn it. Reality, it takes months to learn and maybe years to master. Now, it doesn't mean in between there you can't make a little chatter, but to do things without thought, where it's just intuition, where you don't have to sit there and work off a big checklist, right? Of like, hey, I do this, I have my statistics, I got my candle, I got my pattern, so on and so forth. To do things with that when it's not a checklist takes thousands of repetitions before you do it. In reality, you need live mentoring to get these things going, all right? And when you can become self-reliant and work with a team, you know, a community of traders, then things are going to be a lot easier for you to get moving. So let's talk about I'm going to first talk about how I find names that I want to trade. And then from there, I'm going to show you how to get into these bad boys. And that's really the biggest thing, right? The hardest part in trading is to figure out where the heck you buy. You can watch a million videos, come to a million webinars, and they're like, hey, just and you're like, I just want to know how do I buy this thing? How do I actually make it happen? So we're going to spend some time. I've got some very clean type of setups that are easy to spot. And I think that's the biggest thing with trading is like, okay, I'm looking at something. How can I spot what I need to spot, right? And that's just about pattern recognition and repetition. So let's go into this, all right? So there's some scanning tools that you need to trade in the morning. So I use a software called TC2000. I use a software called TC2000. So it's like $50 a month. You know, you can I don't trade off of it or anything like that. It's just a quick scanning tool where I can do my chart. So you can have like different layouts and all this kind of fun stuff. If anybody needs any of these layouts, just let me know. But from here, you can make any scan you want. What I mean by scan is, okay, I'm telling the computer I'm looking for XYZ type of names. Easy enough, right? And then once you have that, now you want to start narrowing them down to find out what you do. There's some free tools out there. FinViz, Market Chameleon, Stock Market Watch. These are some free tools. The one issue with free tools is, look, we all got to start somewhere. Your trading is a business, right? Like, don't think you got to come in and buy all these tools. There's so many of these like news tools, $200 a month. Come on. Scanning tools, $200 a month, $100 a month, right? There are all these like, you know, algo thingy, $100, $150 a month. This is a business. You're running a small business. You have to watch out for your costs, right? That's just business 101. So the free tools, they'll get you where you need to go. Just takes a little bit longer to find what you need, right? Because they're free. I think personally, if I'm a new trader, right? I got my little brother wants to learn how to trade. You need one good charting platform, 50, 60 bucks a month that can do everything. And there's quite a few that will do it. That will be the foundation of everything that you need. You know, for example, like when I use this T1000, this is not the best in the world or anything like that. My mentor told me to use it 15 years ago, and so I started using it, and it works for me. But this is like $49 a month, you know, but it's the centerpiece of everything I do and how I keep organized, like how I can keep lists and different things that I would need for trading. I know it's like a lot to look at and you're like, holy crap, like what is all this? It's actually, once you use it for a little bit, it's pretty easy. So you got some free tools out there, FinViz, Market Chameleon, Stock Market Watch, that will find you these gappers. So what I mean by that is like, okay, in the morning, if you go on Market Chameleon, actually, I already have it saved. Hold on here. Oh, there it is. So in the morning, if you go on like a tool like Market Chameleon, you'll see all these kind of things starting to pop up. So these are different stocks that have essentially earnings out or some type of news out. And on the downside too. So you have these kind of stocks like this EH, it had bad news out, had bad earnings out, this Wilhelm, Eyes, so on and so forth. Turks, so on and so forth. So this is like a good tool you can use for a pre-market. I'll just post it in here for you guys. It's free, it'll do the job if you need it. I use TC2000. So what I essentially do in the morning, I get my TC2000 up, and there'll be a pre-market, post-market stock list. And it'll show all the stocks that have news up. And I can add like different filters to it and so on and so forth. So what I'll do in the morning, I do it around 8:45 in the morning. I start going through them one by one. And in general, there'll probably be like 20 that have like some type of fresh news out, some type of earnings out. And during the peak earnings season, you might have 20 or 30. Now I want to start going through them one by one and filtering down like what essentially has the best, right, daily charts. And if anybody doesn't know about charts or what I mean by best daily chart, what I mean by that is like, okay, I'm looking for patterns that have clean breakouts, that are breaking out over levels of resistance. So first, let's talk about the mechanics of what I'm looking for, and then we'll go into the actual charts of how they should look. So I'm looking for anything that does over 1 million shares a day in volume. I want the stock gapping up or down more than 4% in the morning. So what I mean by up or down 4% in the morning is like the stock is at $20, it should be gapping up 4% above that, with 50,000 shares in pre-market volume by 8:45 in the morning. If a stock is making a move 4% or more, then usually it's got some type of news out that's fairly significant. Maybe it's an upgrade, maybe they've announced a new contract, maybe they have their earnings out, but I'm looking for that gap up or down 4%. And the reason I'm doing that is that I know if it's already moving around in the pre-market, it's probably got some news out, and then I can dig in and read it if I want. But this is a pure technical trade. Because you're only holding the stock for 30 minutes, an hour, 2 hours, you don't necessarily need to sit there and read all about the company. If you're going to hold a stock for 10 days, 20 days, 50 days, sure, that would be like, okay, I better read up on this company, make sure that they actually do something. But when you're holding stocks for a handful of minutes, it doesn't really matter. I want to look for a stock that has a history of making big ranges. So when I'm going down my list on TC2000, I'm looking for stock that has a history of making past moves. So what I mean by that is like, I want to know in the past when it's had its news out and you can see a gap on a chart, what happened that day? Does it actually have the ability to move 10%, 20%, 30%? Or is it usually something that's just a dud? I want to look and see, is it part of a trending sector? Is it something that is in play? What I mean by in play is, right, how is the rest of it doing? Is it something that people are talking about? It's like, what are some themes that you've seen this year? NFTs, right? NFTs were a theme. Crypto stocks like Bitcoin miners was a theme. Those are all themes. The EV sector dying is actually a theme right now, meaning you can actually keep shorting it. Shorting means betting on stocks that go down. I would say just as much as I long stocks, I also short them when the market trends, when the market turns. The best setups occur when levels are breaking to new daily highs or lows. So I don't want to have a stock that gaps into a resistance level, or if it gaps down, I'm betting on it on the short side if it goes down into support. So let's talk about what the heck that all means, right? So first, let's talk about an opening range breakout. An opening range breakout is a setup built around a consolidation at the open with a minimum of 3 5-minute candles. Ideally, I want to be able to see a very, very clean range develop. So what I mean by that is, like, if you're looking at the open and stock opens up, right? Let me know if you can't see me drawing on this thing. If the stock opens up, I want to see a minimum of 3 sideways consolidations building an opening range. So it's going to look exactly like a little bit of a tabletop on the top. When that opening range takes off, you want to buy it with a stop loss under the bottom of the range. So it's a very, very simple pattern. The key on this, because it's a fast pattern, is making sure that you wait for something to develop. If it doesn't show that, you have to leave it alone. The second way that I would take this trade is if I have a stock that spikes up or gaps up at the open, and what if it doesn't do an opening range breakout and it starts to just pull back at the open? How many times have we seen that? Well, what I want to do on that type of trade, this is just a very, very simple trade, is when it pulls back to either the 9 or 20 EMA, I use on my charts, on my intraday charts, I use 5-minute candles. I use a 9 EMA, 9 exponential moving average, and I use a 20 EMA, and then I use what's called a VWAP indicator. So those are the 3. So I got 2 EMAs and a VWAP. Does that make sense? Cool. So now, if that quick pullback trade, if I don't get an ORB, then I'll let it pull back and I'll see where it settles. And most of the time it's at the 9 EMA because that's at the open. Once I get a green confirmation candle that holds, I'll take the trade, put a stop loss under, and I'll play it back to the upside. And we'll get into some examples in a hot second. These are going to be very, very simple setups, but you got to do them at the open. So you don't want to do these specific setups midday or end of day. And what I mean by that is that there's 3 different time zones in trading. You have your open. That's your 9:30 to 11 o'clock. That's where things are very volatile. You can use short patterns that are based on just pure momentum. 11 to 1, the market slows down. 11 to 1 is about retracement in the market, meaning that the patterns that you used at the open, they just don't work in the midday because the structure of the market and the speed slows down. And then the close is your 1 to 4. And that's where the market or a particular stock will choose a side. So the open is about the spike up or down. Midday is about the retracement. End of the day, you choose a side. Good versus evil. Are we going up or down? The patterns that you use will depend on the time of day you do. Where a lot of traders screw up is they try to use techniques that are based on momentum during times of day where there's no momentum. Or they use techniques at the end of the day that only work in the beginning of the day, so on and so forth. So these are specifically till 11 o'clock. All right, does that make sense? Cool. Good, good, good. So what I'm looking for, all right, I want to have a minimum of 3 sideways candles. So I want a minimum of 3 sideways candles at the open. So when you have like a stock that just like bust open, right, straight off the bat, what we're looking for is just a very, very simple consolidation. So like this is a stock, right, that spikes up at the open. And what you want to see is a minimum 3 sideways candles of consolidation at the open. When you take out the range, you're going to buy and put your stop loss right up under. So it's just a very, very simple pattern. It doesn't have to be anything more. So the key on this is, right, see how the range tightens up over here? So it ends up being a very, very low risk pattern. So in general, this pattern will have 10 to 15 cent risk, and you're coming in for that quicker trade. So see how like this stock was at $39. You get a gap in the morning. You get a gap in the morning, a little bit of spike. Now you start to see like how you're building out a range. So this is the opening range right here. So you need minimum of 3 candles under it. Minimum 3 candles under it. And then when it takes out the range, you can buy and put your stop loss right up under. So in this particular case, you're going to risk maybe about 50 cents. And now you're coming in for a quick trade. The opening range breakout is purely meant for just the open. So what I do is if I have 2 to 1, 3 to 1 reward to risk on the trade, I'll start to scale out of the trade, meaning that I'll start to sell. It is meant as a day trade only. This is not something you get like 50%, 100% type of gain. We're talking about quick trades. Blink. So like this is a stock that has a gap in the morning. See how it was $37? It gaps up to $39. Now, right off the bat at the open, you get a big spike up. And it should look like this every single time. This is when it's going to be a fantastic opportunity for you because you can easily identify. So you've got the opening range, 1 candle, 2 candles, 3 candles, 4 candles, 5 candles developing under that opening range. So you want to buy this thing, I would guess in this around 42 bucks. Your stop loss goes around $41, and now you're trading for the open. Now, it doesn't matter the account size or anything like that. If you have a smaller account, you can only buy 200 shares. If a stock has the ability to move $3, $4, $5, well, guess what? You just made your day. It doesn't have to be any crazier than that. You have 100 shares, fine. If you have the ability to make $3, $4, $5 points on a stock, then you've got yourself a good day. Now, the key on this one is always, like if I have a 2 to 1, if I have a 2 to 1 reward to risk, meaning if I risk $1, when I'm up 2, I always try to sell some. And then I'll use my 9 EMA to trail up and try to ride out the rest. And when it breaks under the 9 EMA, I'll get out. In general, though, I tend to scale out of my trades at the open for the specific reason that it's the open. I want to put some money in the bank for the rest of the day. I want to put some money in the bank for the rest of the day. I'm usually gone out of the, I would say I'm usually done trading probably about 1 or 2 o'clock in general. So see this. You pop up at the open. On here, get this thing up. So you've got a spike off at the open. Goes from 16 to 17. 1 candle, 2 candles, 3 candles. You want to put a stop at the bottom of the range. So I usually put a stop under the VWAP indicator, and now you're into this thing. So this is like another one that has got big, solid range. That's the key. We want to be in stocks that have the ability to give us moves. Yalla. So this is a stock. This is like the Arabic Facebook. Sure, why not? This stock had been in the news for quite a few days. It had a PR out and some good earnings out, and so we had been playing it for a few days. Now this is the same type of deal. See how you get this? It closed at $14. It pops up to 15 at the open. Now you're building out a range. The key is you want to build out a range right at that open. You want to build out a range right at that open. You don't want it to like peak over in one candle, come back down. It's got to look like there's a tabletop on it. So you go minimum 3 candles. So you go sideways, 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 sideways. Now you got a nice range going. So when it breaks the range, you're going to put a stop under the bottom of the range. I mean, in this case, you're probably risking a little bit less than 50 cents, more like 30 cents. And now you're into the zone. You buy 1,000 shares, use 30-cent risk, you risk $300. Now you can come in on the shred. Now you can come in on the shred. And you can do this, guys, on any type of stock possible. It does not matter if it's a small cap, large cap, so on and so forth. I do this on billion-dollar companies. You know, you can do this on Google, Apple, whatever. Same type of deal. Palantir. All right. See how you got the gap out in the morning? Thank you, Vibor. Appreciate it. See how you got the gap out in the morning? All right. So now you got the first candle, second candle, third candle. You got your VWAP, that's your white line under. So your risk on this trade is going to be 10, 15 cents. At 10, 15 cents, if you purchase 2,000 shares, right, you're risking a couple $100. Now you have that ability, though, to go in for a bigger move. See, when trading, it's not about the percentage return, it's about the reward to risk. How can I put myself in scenarios where I lose pennies to make dollars? Pennies to make dollars. That's what we want to be doing. That's the game we want to be in. How can I risk 20 cents to make $1? How can I risk 50 cents to make $2? So if you trade the stocks with the best range, you can use this pattern every single day. I mean, I've been using this pattern for a decade plus, and I would say it's actually it's a little bit of a tricky pattern in the beginning just because the market is so fast at the open, right? And you're like, oh, shit, like, holy crap. You know, market can be so fast at the open, but it works. Like, that's the biggest thing. Like, can we do this every single day? You know, I want to be able to trade stocks and setups that I do every single day. So now the same thing you can do on the short side. The same thing you can do on the short side. So you get a stock that spikes down at the open, 1 candle, 2 candles, 3 candles sideways, consolidation. You break that lower end of the range, and you coming in hot. You short, set your stop, let her rock. Short, set your stop, let her rock. Book face, right? Book face had some news out that there was a government inquiry on something. Cool. So you can see in the morning, the stock was at 280. It gaps down about $6, $7. All right, cool. Now what we need to do is just wait for our pattern. Wait for our pattern. And if it doesn't show, we get out. So I won't wait for the candle to close, and I'll hit it as soon as it breaks down. And I'll tell you why, Chris. Depending on the type of stock, so like Facebook, for example, can be a little bit slower. But if there's, especially on the downside, if there's bad news out, these stocks will drop so fast. These stocks will drop so fast. So what ends up happening is, like if you wait for the candle to close, you may be giving out dollars, right? You may lose dollars. So like for example, in this one, okay, it's at 272. You short it, put a stop over the VWAP, and now you're off to the races. But like if you wait an extra candle, I mean, you might lose 5 points, 6 points. Like for me personally, like I trade a much bigger account. I'm probably going to have like 2,000 shares of this thing. If I wait for the candle to close, I might be losing out on $5,000, $6,000, $10,000, if that makes sense. So we want to really be hitting it as soon as it breaks down and then we're good to go. I do this both on the upside and downside. I would say, frankly, especially during like earnings season, like you're gonna have stocks that, and during earnings season, you're gonna have stocks that go both up and down. So it's very, very important to be scanning for them on both ways, if that makes sense. Markets change all the time. And so what we want to always do, you have to learn how to short. That's probably one of the advice I'll give you. If you want to be a day trader, at least, you have to be able to short. Because if you don't, then you're going to have a lot of trouble, like when markets turn. So let's go into the quick pullback buy. So the quick pullback buy is a setup, and this is a very simple setup. It's a very simple setup. So if a stock doesn't want to ORB, right, and it starts to pull back into its moving averages. So you have this stock here, futures. So I really like this daily chart. You can see you got like a nice daily chart that looks like it wants to break out. So now what we're going to be doing is like, see how like you got a gap up on this bad boy. Now you start to pull back into the 9 EMA. When you get a green candle that holds at the 9 EMA, so you want to see exactly where it holds. Like if you just blindly buy it when it hits the moving average, you'll lose money because it may just knife through. But like moving averages will work. Like once you get a green candle to hold, put a stop loss under, and now you're into this thing. And the range on some of these stocks, like this is a $150 stock. For a lot of you guys, you may not want to trade something so expensive, but don't ever think the price of a stock has anything to do with how much money you can make on it. For example, if you have a smaller account, you can only trade 50 shares of this thing. Who cares? It can move 146 to 160. The range on it is huge. So when you get such a big range, it doesn't really matter. If you can make 10 points with 50 shares, that's a lot easier to do than trying to trade like a dollar stock and like fiddling around with it, trying to catch something. So quick pullback buy, gap up, pull back into the 9 EMA. You want a green candle to hold, and now you're golden. I do this setup every day. So if it doesn't ORB, then this is what I look for. Good. SFIX. So this is $74. You get a little gap in the morning and a big spike. See how there was no ORB at the open? Okay, so there's no ORB. That's totally cool. We just sit. It has a spike up. You start to pull back into your 9 EMA. Once it comes into 9 EMA, as soon as you get a green candle that holds there, put a stop under the 9 EMA. Now you're coming in hot on the kitchen. So no ORB, you do a quick pullback buy. So that gives you the flexibility. If it doesn't do one, it's probably going to do the other. A handful of times you may have a stock on your list and it doesn't do either. That's okay. If it doesn't, you just get out. If it doesn't, you leave it alone. You move on to the next one. I tend to watch 5 or 6 stocks at a time, and you just move on to the next one. And an easy thing is like with your charting platform, for example, like I use a 6-window layout. So like you can make different layouts on your charting platform. So what you got over here is like I have a 6-window layout here. So if I have 6 stocks I won't like, what I'll do is I'll just drag these to another monitor. And it doesn't matter, even if you're trading off your laptop or something like that, don't worry about it. There are USB monitors. You can buy for like $100. You can hook it to your laptop and you're good to go. So that's how you want to kind of keep track of these. So if you have 6 opportunities, make a chart with 6 layouts on it. Then you'll be able to watch every single one of these and not miss anything. And you probably don't need to watch more. I would say you probably don't need to watch more than 6, at least when you're new. And the reason is just it's super hard to like stay organized and get really good entries when you're watching too many stocks. A big portion of when you're new is like, how do I keep my attention span? There's a thing, it's like just information overload, where you get that paralysis by analysis. That happens to all traders. And the easiest way to get rid of that paralysis by analysis is to cut out all your inputs, meaning you turn off the Twitter and the CNBC and the Discord rooms, and you knuckle down to, okay, these are the 6 stocks that I want to watch, and now I'm ready to shred. Does that make sense? Cool. Let's talk about how do we build habits for developing consistency. So number 1, building a trading business plan. This is probably one of the first things that you want to do after you learn how to trade. You want to build a trading business plan. It's important because if you don't have an idea, a template of what you're trying to do, where you're trying to go, trading becomes very, very difficult. All right. You wouldn't go into a bank and ask for a loan to build a business, a bar, restaurant, whatever it might is, without a plan. Your trading is the same way. You're taking your limited amounts of capital that you could be using for something else, and you're going to put in the stock market without a specific business plan. You might as well burn it. Actually, just send it to me. I'll do that, right? Like, give it away. You'll feel better, but you will burn it if you don't have a trading business plan. Create daily routines. When I talk about paralysis by analysis, the easiest way to get rid of paralysis by analysis when you're trading is by having very, very specific routines. Hey, I wake up in the morning. This is how I go through my watch list. This is how I build up the stocks I'm going to do. This is how I narrow it down. So you have specific processes to govern your behavior. And once you do that for a handful of months, you're good to go. Once you do that for a handful of months, it'll become like second nature to you. Then you want to journal every day. You want to journal every day. So I mean by journal every day, you don't have to like write them down. They have all these online journals and stuff like that. And like I use a company called TraderView. I don't have any relation with them or anything like that, but a lot of my students use it. It's kind of cool. Like I can see like what all my students are doing. I can actually look at their trades. It's kind of cool. So I can go and see like what all these people are doing and actually look at the trades. And I actually do my trades in here too. And it's kind of fun. Like you can go in and like you'll be able to see like, okay, this is what I made, this is what I lost, like these are my good trades, bad trades, so on and so forth. Like you see this day I got smoked out, minus $6,000, but I'll have every single trade logged in and it'll start building me stats on them. So I'll be able to see like where I bought, where I sold, so on and so forth. And it's awesome. Like you can keep track of so much data and reports. Like this is probably the #1 tool I use beyond my charting so that I can actually go. So I'll be able to see like, okay, my gross P&L, this is my down days. Like you see this day, I really lost my shit. I lost 20 G's. That's not good, right? So now I want to probably study like what the heck happened that day. If I can start to see my win percentages, you know, so on and so forth. And it ends up being like pretty cool. Like you can go in and see like exactly what you're making, what you're doing, and then you'll be able to see the statistics. I think that's probably the most important thing is like I need to be able to see the statistics of how I'm trading when I'm winning versus losing. So I can see here like even price by performance. So it seems like, you know, 20 to 49 is like my sweet spot, right? And then my second sweet spot is 50 to 99. And then there's like these like really expensive ones I don't make much money on. So I want to start to narrow down, like you see here, 2 to 49. Yeah, I make a little bit of money on them, but that's not really my sweet spot, you know, and narrowing down like what you're doing right versus what you're doing wrong is probably the most important thing that we can get going. The second part is reviewing charts every day. Try to review at least 500 charts every day. On TC2000, you just have to hit space bar to start going through. It's good to go. Find a mentor or a trading buddy. You don't have to have necessarily a mentor like me. Obviously, you can probably see I'm very hyper. I'm always barking at everybody all morning. That might not be your thing, but at least try to find a trading buddy, somebody that knows what they're doing. There's so many ways to do that. You can go on the Twitter or so on and so forth. Find somebody that's just got the knowledge you need. Work with them. Sit on G-Chat with them. I got an Indian guy from Bangladesh. His name is Saeed. I trade with him on G-Chat for the last 15 years. We sit on Gmail chat. Hey, we throw out ideas, so on and so forth. It's been one of the things that's helped me so much. Manage your risk aggressively. You can always come back from small losses, You never come back from the big ones. Write out your trading rules to protect yourself, guys. Most traders lose because they got poor risk management. They get FOMO. They have no idea how to time their entries and exits. I showed you a piece of like what I do, right? With the quick pullbacks and the opening range breakouts. That's about timing, right? Those are timing setups. Most of the time, it's poor preparation. You don't even know what to prepare for. That's the hard part. Most people are inherently hardworking. They will do their work, but they still need to know how to prepare. And that's important. That's where I come in, right? And then you got to have the resilience to keep doing it over and over and over. So how do you join a good group? How do you make actually money? You got to build a risk management strategy, from position sizing to where I put my stop losses, a system around your behavior. I have routines, checklists for each type of trade. Hey, I want to do this type of trade. 1, 2, 3, 4, 5 is what I need to see. Then I do this. Treat trading every day like you're running a business. Work on your journaling. Think about this. I've been doing this since 2008. I had hair like Brett Cooper when I started doing this. I'm still doing my journals, using that data to govern my behavior. That data will tell me, so we can often have an inkling of what we're doing right or wrong. That inkling is usually full of shit. The data will tell us like, okay, this is my sweet spot. This is where I'm struggling. This is where I need to focus on. The data takes the guessing out of it. I spend so much time. So that trader view I showed you, and there's many of those out there, Trader Sync and so on and so forth. You put in your brokerage connect, the data populates, and then you fill out the rest. You write your notes, tag your trades, so on and so forth, and it's good to go. It takes me 15 to 20 minutes a day to have rock solid data on every single thing I do. Start small, go for base hits, not home runs. For every Dodge coin there's out there, there's 1,000 that didn't do that looked like they could. Learn to cut losses quickly. We are in the game of risk management and capital preservation. Your job is not to be a trader. It's to be a risk manager. Become a master of one thing, not a jack of all trades. That is huge. I've got a lot of friends that are proficient at many styles of trading, but masters of none, which means you can't really make any money. These two things that I showed you, these two setups that I showed you today, I am the master at those. I can do them day in, day out, every single day, year after year. I can do them in futures. I do them in cryptocurrency. I do them in the stock market. I'm the master of those two setups. There's nothing in those setups that can surprise me. I have contingencies for every single thing I can see in them. There's nothing that can surprise me. That's where you want to go. Find one thing that you're good at and become a pro at it. So how do I get started to learn all this stuff? I trade live in front of you guys all day, in front of my students. I couple my Discord room and daily live stream with education, meaning in our chat room, you get a 26-hour course. I do webinars 3 times a week live, because I believe live teaching is the only way to get this done. I come in at 9 o'clock every day and I trade till I'm done trading. You see me on screen share. I'm telling my guys what I'm buying, what I'm selling. We got a cryptocurrency room, all this kind of fun stuff. It's actually a pretty cool chat room. I'm trading, you get access to cryptos and all this stuff, and I've been on fire. I mean, you see long 121, sold 158, Neo sold 85, longed at 66, so on and so forth. I'm trading cryptocurrencies. We have part-time trading alerts for those that want to do longer term trades. And then of course my bread and butter, which is the day trading, which I'm on the tube, trading live in front of everybody every single day. So our accelerated trading course is 25 hours of content on every single thing you need to know about trading. And then we take that book knowledge, turn it into real life knowledge when I trade live. I think actually that's a huge part of trading. Not so you can follow along alerts. That doesn't work. But it's going to give you the confidence like, oh man, this guy's He's making moves every day. I can do that. Like, I can do that. I can learn. I can watch. I can put these things in real time. That's where we want to go with this, so that you're self-sufficient. It's accelerated trading course, 20 hours. You get access to all my layouts, scans, everything. So you don't have to sit there and recreate this stuff. I've got it all. In T3000, I literally just send you a file. Yours turns out like mine, and you have everything that you need. I'm on live stream all day. We do on Sundays class for members, meaning we get ready for the market. I answer questions. We literally build out our lesson. I show them how to scan, how to use everything. Trade market recaps. So 3 times a week, we go through, like, these are the trades I took. This is where I did right. This is where I screwed up. Trading plan templates, flashcards, everything that you guys need to get started. There's nothing in my head about day trading that is not in this class, that comes also with the chat room. And of course, you know, we have quizzes and homework and all that kind of fun stuff too. Guys, use the coupon code TradeThirsty. Let's open this bad boy up to some questions. All right, let's open this bad boy up to some questions. Guys, if you ever want to talk to any one of my students, I'll give you a name, I'll give you a phone number, and you talk to anybody. You know, the one thing you'll see about me is I'm easy to reach. I'm Kunal00 on Twitter. You can email me at bullsonwallstreet@gmail.com. You can send me a text. I'm actually probably one of the few people in the world with a big business that answers his own phone. 517-974-1480. Send me a text. I'll always reply. Or you can call, whatever. I do sneaky FaceTimes back to people sometimes, so I do apologize on that aspect of things. You guys hit me up anytime you want. Let's open this thing up. If you guys got any questions, hit me up. Rajesh, I'm an options trader. How many of these resources work there? TC2000 also, we have options trading classes and stuff like that too. And yeah, our students still use that. Good. What is ORB? ORB stands for opening range breakout. Cool. Thank you, Mr. Brown. I appreciate that, by the way. Thank you, Mr. Brown. I appreciate that, by the way.
Oh, man. They're going to need to know how to get in touch with you. I put the link in the chat.
Cool.
And you just gave them your text number. You just gave them your cell number. And do we have an email address you want them to talk to you at, or you want them to go to that link?
Yep, they can go. Oh, this is my personal email. You can get me. I answer my own emails. Hit me up anytime. Rajesh, look forward to it.
All right, cool. All right, thank you so much for joining us. We're going to have to move on to the next person. I really appreciate everything you brought here today. Thank you.
Thank you. As always, guys, hit me up anytime you need me. TradeThirsty, thank you for having me on.
Thanks for being here. We appreciate it very much.